Since is run by a bunch of investment bankers, and Morningstar's modus of helping.
I'm Jason Stipp from Morningstar. As the market has seen some increased volatility over the last few weeks, primarily because of some issues in Europe, we're checking in with some notable managers to see their take on the situation, their outlook, and if they're seeing any opportunities today. Joining me is Kevin Preloger. He's from Perkins Large Cap Value, also an asset manager here in Chicago. Thanks so much for joining us today.
Thank you, Jason.
So the first question for you, at the end of 2009, I was looking over some of your communications to shareholders. You had mentioned that the S&P looked slightly overvalued to you at that point. Now that we've seen 2%, 3% corrections at some points year to date for the S&P, what's the market looking like as far as a valuation, sort of a broad valuation front? Are we seeing anything a little bit more attractive, or does it just look kind of reasonably valued?
I think going back, as you mentioned, at the start of the year, we did think that the market was fairly valued, and our risk rewards in our portfolio were reflecting that. So we were selling those things that had unattractive reward to risk characteristics and adding those that had more favorable characteristics. But again, the cornerstone of Perkins Investment Management in all three funds, the small, mid, and large cap value funds, is protecting on the downside. And we still viewed the global economy with a lot of risks that were not reflected in the valuations at that time. Now, fast forward to today, given the pullback, we think that there are more attractive opportunities out there, and we've taken advantage of the recent market volatility to add to those names that have more attractive reward to risk ratios, as well as reducing the positions where we don't have as attractive reward to risk ratios. But again, the utmost focused on downside risk, which I think has served us well over time at Perkins.
Sure. One of the things that we have been noticing is that throughout the recovery, higher quality companies didn't seem to rally as hard. Now, they hadn't fallen as hard as lower quality companies either during the downturn. But given that you folks focus on higher quality, you have a higher quality portfolio names. Overall, what's the valuation of your portfolio looking like? I mean, has it been sort of buffeted around with the market, or do you still see that higher quality firms are relatively more attractive today?
I think higher quality firms continue to remain very attractive, and I think even going back to the start of the year, they were attractive then, and particularly amongst the larger cap companies. So we're seeing those opportunities for both the Perkins Mid Cap Value Fund and the Perkins Large Cap Value Fund to buy new names that we haven't historically been able to own before, given the valuations. I'd also say that, as you saw through the first part of the year, it was the lower quality issues, those that didn't have healthy balance sheets, that had a lot of debt, not much in the way of free cash flow, and in many cases were nominally or not profitable at all, as opposed to the companies that we own and we like, with very healthy balance sheets, stable free cash flows, and earnings multiples that seem to be fairly attractive. So that's where we continue to find the value today, and we think in times of uncertainty that those are the names that have less downside risk and where we want to be positioned. And I would say that all three funds at Perkins, in straight up momentum-driven markets, we will lag. But in markets where you have increased volatility and the market focuses more on quality, we're going to go down a lot less.
I think certainly with all the uncertainty that's out there today, the fact that you can buy some of these higher quality companies at relatively reasonable prices is a good thing for investors in an environment like this, I would say.
I think so, and as I mentioned, particularly the opportunities that we're seeing in the Perkins Large Cap Value Fund, technology, I think, is an area where we're seeing great values. Companies such as Microsoft, Cisco, and Intel, which have very healthy balance sheets, generate lots of free cash flow, are trading at below market multiples, and we think have a lot less downside than the low quality peers.